Hey, it's Brian here from quantlabs.net. Just wanted to show you a book I've been reading. I've been turned on to it, called Trading Systems and Methods by Perry J. Kaufman. Now, this book is a monster. As you can see here, it's over 1,200 pages. I'm going to give you a complete review of this book as well as some other stuff. Now, before I continue, I just wanted to state two things. It's going to be probably a very lengthy video, and I'll be going through the table of contents. If you get woozy from watching all this, don't watch it. Good as that, right? Anyway, so let's get on with this. Now, in terms of the file samples, there are file samples with this book. Firstly, there is code, which is part of the book, but it's all in TradeStation. Now, because there's code, it is TradeStation. It is a little wonky to deal with, but the challenge I've come across with a lot of other books that I've read is they'll have a lot of theory, have some code, not enough code, or the code can't be fully implemented properly. Just due to the fact of trying to integrate it with .NET and whatnot, it is a challenge. So, we are talking about this code here, as I said, which is TradeStation, easy language. Now, I'm hoping I can sort of reverse engineer this somewhat and be able to drop this logic into my C# .NET components for my own system that I've done in my workshop. So I'm hoping that will be accomplished here. Not easily, but it can be done. Now, as I said, there's indicators, functions, and actual strategies written out in TradeStation. So let me just show you another example here. This average ranging gap, blah, blah, blah. Okay. So the other thing people need to be aware of is that there's a ton of spreadsheets here in Excel. Now, I've always known that Excel is proving to be a tool that I probably will use as part of my analysis. Won't be part of my core execution for trading, for submitting orders. Obviously, that's going to be way too slow. But I'm hoping it will be good enough for analysis and just using as potentially screeners and that sort of thing. Excel's fairly sophisticated. If I need speed, I'm looking at possibly SharePoint as a server to speed up these Excel front ends and be able to integrate SharePoint somehow, as I don't have MATLAB production server. So these may become useful, and as I said, SharePoint may become part of something. Not saying it is or it won't. And also for those in TradeStation, don't worry. My goal is to keep everything in .NET. So if you're learning .NET and C#, continue with that, because I don't see myself really using TradeStation really. Maybe for demoing and research, but not for actual production software. Alright, so that's with the files and all that. Before I continue, this book is going to have a massive impact on how I proceed with trading models and all that, because this is my review on this book. And I think first off, before I get into this, if you're new to all this and you're not a techie person, I think you're going to find over time you're going to struggle with the ability to understand and execute trades and be able to build your own trading platforms, especially custom or proprietary ones. If you don't have a strong background in programming, because there's a lot going on here. Every page that I'm going to show you or walk you through this table of contents has some form of programming to it. My intent in a future membership will try to break it all down and simplify it, but again, it's not going to be a cheap task, let's put it that way, for potential users of this content that I'll be providing. Alright, so let me just state about the book itself. This is the first book that covers everything, absolutely everything. There are books out there, I'm not going to say names, that do not cover things like diversification, portfolio allocation, and risk control. This book has all that. Now, up until this point, I was always confused, how do I handle risk control and diversification or portfolio allocation? What I quickly realized is that you can apply this at the end based upon its own set of models and algorithms that you can develop or use from the book as part of the samples. Okay, so I'm not too concerned about risk control and portfolio allocation at this point. I will add them to a complete ensemble of files that and algorithms I'll be including as part of my system for automated trading, and they will be just watching the results of everything as I'll explain it as I get to it down the line in this review. So again, let's talk about the other challenges I've come across with a lot of the books out there, because honestly I'm no expert at any of this stuff, especially building algorithms and models. There's no way I'm an expert at this, due to the fact of math has always been my weakness. But again, this is the first book that I've come across that fully explains an algorithm and walks you through each step of the calculation of the algorithm presented. Again, that's the only book that I've come across that does that with source code, as well as I said, talking about this risk control and portfolio allocation. So as you can tell, this is somewhat a good launching pad for anybody new to all this. It is a monster to go through, but if I start with this book, I think I would save myself a lot of time, as well as reduced a lot of confusion, because it has everything in there. And most of all, it includes both the source code as well as the walkthrough of calculations. So let's get into the actual topics here. Now, this book is divided up into just using technical analysis, a lot of that, and some other charting patterns, and I'll explain that in a minute. So obviously it goes on about random walk theory, how to measure noise, background material for all this, and in the second chapter it starts to talk about all the basic concepts. This right here is key, this basic concepts of calculations. This is really gave me a leg up on all the basic calculations, be it if I was to work in MATLAB, R, and even in the .NET or C++ languages. And it explained all that fairly well. It explained, as I said, moments of distribution, statistics-wise, normal, and all the other major ones. Explains quite well variance skewness and kurtosis, the risk and return, measurement of performance, probability, supply and demand, and then we get into the charting. Now, this chapter, for chapter 3, is somewhat, I'm sure there's some things in here that might be useful, but again, this is all technical based, or charting, charting, which from a programming standpoint is kind of hard to do. Even the book admitted that. So this is really only good for point and click type of people, or discretionary traders that use visually on how to make trading decisions based upon charting. Now, from that, I concluded that obviously I only want to work with more mathematical based principles to make trading decisions, and some of them I like, some of them I don't like, but at least this book has given me a very good understanding and description of what's useful and what's not, like pivot points, channel breakout, commodity channel index. We also move into chapter 5 here, which talks about swing trading. It's a really good description of that. Event-driven trends, how to program those, point and figure charting, blah blah blah, and the end day breakout. Chapter 6 I found was very useful. Again, regression analysis is really important, especially you'll find that a lot in the MATLAB. So reading this chapter will give you a good foundation of how to do regression. Again, it walks you through that process using a time series, price data, correlation, linear regression, nonlinear to linear, and all the basic principles that I intend to use for forecasting ARIMA, developing trading signals from a linear regression model, so on and so forth. Now, Chapter 7 is another good one. Forecasting, geometric moving average, all the different types of averages that are available, exponential smoothing, very basic stuff, but really, again, it's not really useful for an advanced practitioner, but I do find that this book is really good for, again, for newbies and wannabes, I guess you could say. So Chapter 8 focuses on trend systems, bands and channels, obviously the different trends, moving average for signal processing. Now this is another one, early exits. One of the big challenges I found in a lot of books where, yeah, we can show you how to develop a signal, yeah, we can show you how to enter in the market, but there wasn't a lot of focus on it in those books that focused on how to get out of the position or out of the market. So this book does a really good job of that and has all these different samples that are out there that you can use. So again, early exits from a trend, Chapter 9, moving average, trend, where am I? Yeah, momentum and oscillators. We got momentum trading, oscillators, all the different types of momentum-based divergence, and then Chapter 10, seasonality and calendar and patterns. I know that this can be useful, but for me right now, I'm not putting this as a priority on the different seasonality, the seasonality filters, effects on the stock market. Before I continue, I think it's really important to stress that this book does cover a lot of the assets out there, the different types of instruments. There's some coverage of Forex and equity and ETF, but it mostly focuses on futures and commodity, just due to the fact that's what seems to be the preferred way of trading. But no talk of any options at all, but I just wanted to highlight that. Cycle analysis, where they have everything goes in cycles. I'm not going to spend too much time there. Volume, open interest, and breadth. These are really useful. Standard interpretation, volume indicator, breadth indicator. Again, indicators are really important. Different patterns again. Intraday volume pattern, filtering low volume. And this is a really important chapter here again. For Chapter 13, spreads and arbitrage, carrying charges, spreads and stocks, arbitrage, relationships, risk reduction and spreads, carry trade, which is popular, changing spread relationships, behavioral techniques for Chapter 14, event trading. And here's the usual Fibonacci, Elliott wave, which I'm not really, I guess you could say, a fan of. WD Gann, Fishers, this is astrology, which is kind of out there. Chapter 15, pattern recognition, daily high and lows, open gaps, which is important, time of day, impact of that, artificial intelligence methodologies, computer-based recognition. These two here, artificial intelligence methods, I'm really not convinced for neural net yet, but MATLAB does have some good examples of that, which I've shown in the past. Then in Chapter 16 we go into day trading, transaction costs, the impact of those, price patterns, breakout volume patterns, and pricing shocks that have impact on your trading. Chapter 17, adaptive trend calculations. Now this is kind of important as well. When you read Barry Johnson's book, it's really important to have models or trading strategies that are pretty well on the sideline, waiting to be used for different conditions, so that they can be used to assess which can be applied or not based upon the market direction, whatever you're watching or listening. So we have here trend calculations, variations, intraday breakout systems, and so on and so forth. Then we get into pricing distribution. Some of this is useful. Multiple time frames, all the different time frames on the impact of different, how to use different timing frequencies, and then how they can be useful for you. There's different trading systems mentioned here. Chapter 20, advanced techniques, measuring volatility is key here. And there's a good number of sections on it. As you can see, liquidity, trends, fuzzy logic, expert systems, neural networks, again, fractals and chaos theory. Entropy seems useful. Genetic algorithms is very useful. And this replication of hedge funds, I don't know. Okay, so then we talk about system testing, importance of it, test data, searching for the best results, large-scale testing, comparing the results of two systems, profiting from the worst results, price shocks, wide range, changing parameters, robustness. And this is another good popular topics from talking to people throughout my membership. There is gambling techniques, which is pretty popular, extreme events, trade-offs, system trade-offs, some sample signals and trading signals. Now, as I said, the last two chapters here, chapter 23 and 24, are important because this is it kind of walks you through all the potential things that you need to be aware of. Got risk reversion, liquidity, risk and return, leverage, Kaufman stops and profit taking. Again, these are really useful for your exit analysis, ranking of market selection, ruin, I can't remember the name of it, probability of ruin and success, entering position, compounding a position, using this optimal F for reinvesting, and the last chapter, really important stuff again. This GASP, genetic algorithm solution to portfolio allocation, is quite good. Volatility stabilization, using an Excel solver, and then all the different types of calculations that you could use for allocating your portfolio during your trading. Now, it doesn't stop there. We got some, as I said, there's some really powerful walkthrough of the calculations, but some of the appendixes even go further. For instance, statistical tables, which is important, obviously. You have your explanation walkthrough, explanations on linear equations and Markov chains. Things using trigonometric regression is mentioned as well. And again, all these different walkthroughs from a mathematical point of view. Really good book. This is going to have a major impact on how I proceed in banging out my models. I do have an order of model development that I'm going to have underway. I've talked about that in the last few months. But I'll be starting with mean reversion. As I said, in terms of risk control, again, those will be applied, but not until later on. And then obviously, once we get all these models up and running, we have to worry about our trading and portfolio optimization or allocation. Okay, so that is that. I hope this really helps you out. This book was very useful for me. If you're new to trading, new to automated trading, or even, dare I say, high frequency trading, and there's some quant principles, a lot of technical analysis in here, valid stuff you can go through and pick up what you're comfortable with to apply to your trading. I've got quite a bit from this book, and hope you do too. Really useful. So I'll talk to you soon. If you got any questions, please let me know about this, and I'll tell you the direction I'll be going in. Talk to you later.